and gentlemen, without further ado, let's begin the third webinar for MIA Digital Month 2025 with a panel session on tools and technologies for sustainability reporting in Malaysia. The moderator for the session is Mr. Stephen Chong, member of the Digital Technology Implementation Committee DTIC MIA. Stephen was a past council member of MIA and was the founding chair of the MIA Digital Economy Task Force and DTIC. He is the founder of Ledger Brains GA Alliance, an award-winning regional technology startup in the fintech and accounting technology space. He is also the managing partner of Morrison LC PLT, a member of Morrison Global, a leading international association of professional service firms, ranked as the 9th largest association in the world with a total revenue of over $1 billion. Stephen is a member of MIA, fellow member of CPA Australia, ACA of the ICAEW UK, and 2 master's degrees holder from Victoria University, Australia. And joining him as panelists today are Mr. Adham Fayumi, co-founder and CEO Rymba, a cutting-edge environmental technology company specializing in AI-driven forest intelligence. With a deep passion for conservation and sustainability, Adham leads Rymba in leveraging drones, LIDAR, multispectral and hyperspectral imaging, and satellite data to monitor forests, track biodiversity, and assess carbon stock with precision. Before Rymba, Adham successfully built a B2B SaaS startup in the automotive industry, bringing his entrepreneurial expertise into the ESG space. Now, his mission is to bridge the gap between technology and environmental conservation, providing actionable insights that empower governments, corporations, and conservationists to make data-driven decisions for a greener future. At the forefront of climate tech innovation, Adham is actively involved in developing solutions for carbon credit verification, reforestation monitoring, and sustainable land use planning. His work has positioned Rymba as a key player in ESG-driven digital transformation, offering scalable and transparent approaches to ecosystem monitoring. Our second panelist is Ms. Karina Mohammad, Director Sustainability and Imaging Assurance, Audit and Assurance, Deloitte Business Advisory Sdn Bhd. Karina is responsible and Karina is passionate about supporting leaders in creating a better world through responsible and sustainable operations. She has over 25 years of experience as a senior corporate leader in both public and private sector, specializing in policy development, regulations, public financial management, strategic planning, sustainability ESG, change and transformation management, quality and business process management, and ESG assurance and advisory. She is a fellow of ICAEW, Chartered Accountant member of MIA, and ASEAN Chartered Professional Accountants, and member of Malaysian Institute of Management and International Society of Sustainability Professional USA. And the last panelist for today is Ms. Nusaybah Mohammad Sofian, Senior General Manager, Group Financial Management and ESG Compliance PETRONAS. Nusaybah began her career at PETRONAS 2 decades ago as a junior executive in the finance division of PETRONAS Trading Company Limited. After 2 years, she expanded her expertise in financial accounting and reporting during an 8-year tenure in various units under Group Accounts and Reporting. In 2012, Nusaybah transitions to the upstream business, where she held progressively senior roles. For 8 years, she served as Senior Manager of Financial Accounting and Tax Reporting for PETRONAS Carigali Sdn Bhd. She then advanced to become General Manager of Management Reporting and Budgeting of GFC in 2020. She also led the Financial Sustainability Unit, collaborating with the Corporate Sustainability Department, CSD, to advance PETRONAS' sustainability agenda. A key achievement was spearheading the implementations to the TCFD framework in the company's integrated reporting from 2022. Following significant contribution from the finance division in driving PETRONAS sustainability initiative, the unit was formalized into a new structure under Group Financial Management and ESG Compliance. As of 1st June 2024, Nusaybah oversees this newly established unit, leading PETRONAS financial and ESG compliance efforts and supporting the CSD. Now I pass the floor to you, Mr. Stephen.
Thank you, Nat. Thank you so much. Good morning, everyone, and welcome to week 3 of MIA Digital Month. And in the past 2 weeks, my fellow members, committee members from DTIC have covered AI with you. And today we venture into the interesting topic of technology and sustainability reporting, which, if I may add, is a pretty high impact aspect that is affecting us in accounting. And hopefully, as what the standard says, it's hopefully an opportunity as well for us in the industry. And having said that, the overview of the topic, as the title implies, focuses on the ISSB standard that kicked in not long ago in the form of IFRS S1 and S2. So clearly these standards come along and push through a certain disclosure requirement on companies where the aspect is around climate-related risk and opportunities. So because this is a technology event, so obviously we want to come from the technology perspective as well. So on one sense, we could talk about the tracking or the challenges around using technology to track, stuff like carbon emissions. But on the other hand, we also have a very interesting guest today who is very deep into the technology space in terms of ESG. So I would like to feature that for our audience benefit as well. So without further ado, allow me to invite members of the panel to do a little bit of a contextual intro about themselves. Now, Nadira has introduced members of the panel, of course, but if I could invite Karina, Nusaybah, and Adham to give us a bit of glimpse into what you do in your day-to-day work and help our audience sort of come into context in terms of why you're on the panel today and what we are probably going to talk about. Perhaps if we could start with Karina, if you'd like to do the honors.
Thank you very much, Stephen. Apologies to the members. I have a flu, so my voice is a little bit harsh. I would like firstly to thank the organizers, MIA, for inviting me to be part of today's panel, and I'm honored to share with you on today's hot topic, which I hope you will find insightful and helpful in your work. Now, I have more than 10 years experience in terms of sustainability and helping companies in moving along this journey. And it is a journey, and my day-to-day work involves not only just sustainability reporting and assurance, but it also helps clients in terms of their strategy development on their ESG, integrating their ESG risks into their ERM systems as well, and then making sure that the culture is also changed and everyone is on board. So we do a lot of capacity building for everyone in the company to be on board and at the same speed. And then, of course, it's not just from the perspective of reporting, but we also look at the human capital as well as the development in terms of this space, because this subject matter is rather relatively new. So a lot of talent have to be across a wider background rather than specifically to sustainability. So don't be facing a lot of challenges in terms of recruitment is one of them. So if they don't have sustainability background, it's okay because they can be trained. Especially accountants, you can take that change and you can lead this space.
Thank you, Karina. Nusaybah, perhaps over to you.
Thank you so much, Stephen. Assalamualaikum and a very good morning to everyone. First and foremost, thank you so much to MIA for this invitation, an opportunity for me to engage with professionals who are working in accounting space, whether as practitioners, educators, and I was made to understand that some of you listening are also still accounting students. As Stephen mentioned, and as well as what Nadira has narrated just now, I've been in PETRONAS for quite significant number of years, 22 years to be exact, and I've been given a chance to contribute through an organisation that operates in energy sector. Throughout those years, as you heard, my experience typically in the hardcore accounting work, preparing the audited financial statements and focusing on management reporting and budgeting. And recently, fairly new, I started to evolve in these professions where I carry a role specifically on finance-related contribution to sustainability for PETRONAS. Nevertheless, I would like to note here that my appearance this morning, not representing the organizations that I'm working, but rather sharing my personal views as a professional accountant that has some experience in sustainability related work and probably useful knowledge that the audience can consider to apply in your respective area. Since my experience probably fairly new, not as long as Karina, 10 years, a decade. Nevertheless, it has been an enriching journey, very purposeful, as I realized now through this profession, I can elevate the level of meaning and purpose contributing as an accountant to an organization. Because if in the past I enjoy being in these professions by packaging and reporting how good the organization is doing as far as business is concerned, typical literal corporate profits in nature, but now involvement in sustainability complement the purpose of me as an individual living in this world, in a way contributing in telling how organization is progressing towards contributing to a greater good of mankind. So that is how, as an accountant, I connect myself to the subject of sustainability. So hopefully, through the conversations that we are going to have today, it will also create some spark in all of you trying to develop the same connection. Hopefully. Over to you, Stephen.
Thank you, Nusaybah, and members of the audience. I think that you got a bit of a glimpse on what's coming from Nusaybah. You'll definitely hear very interesting contents and points from her later. And Adham, perhaps over to you.
Thanks, Stephen. And thank you for the invitation as well from MIA. It's an honor for us to be able to share our passion with the audience over here. So there's this growing concern and a critical issue that we're tackling with Rymba, right? Which is the lack of transparent, verifiable, science-based data in the nature and sustainability space. So I'm coming from a different background compared to all the other guys. We're more tech-based, nature-based, science-based sort of thing. So if anything gets confusing or a bit different or new, please let me know, ask questions, and I'll be free to go through in further details if required. So back to the concern and the challenges that are facing, right? ESG and sustainability disclosures are basically mostly based on estimates, assumptions, or even figures that are just self-reported. We see forestry, agriculture, even carbon projects, they often lack real-time monitoring after the initial tree planting or reforestation efforts. And these are huge issues. Another problem that we see is ESG audits are highly costly and time-consuming. They often require manual site surveys, ground sampling, and even third-party validations, which may not even be accurate. And there's this huge concern around greenwashing, where organizations actually have to avoid this to avoid reputational risk. They need to ensure their sustainability claims are actually backed by hard actual data. So what we do at Rymba is we basically help to solve a lot of those problems and make things easy for the organizations. We provide a platform that captures and processes and analyzes real-world environmental data directly on the web platform. So we do this by capturing data from high-resolution drones. We use multispectral, hyperspectral sensing. We take satellite data as well, things like Landsat, Sentinel, so on and so forth. And we couple all of that with our AI-powered module that processes and basically analyze all of that data to give out points such as forest conditions, tree species, canopy growth, the carbon biomass, so on and so forth. So yeah, in a quick nutshell, that's basically what we do, and that's a quick illustration. Back to you, Stephen.
Thanks, Adham. So, ladies and gentlemen, I was joking with Secretariat when we were preparing for this session that, as promised, we bring you rocket science as well in the form of satellite imagery. And as what Adham mentioned just now, we do have a Q&A session coming up towards the end of this discussion. It is via Pigeonhole. So if you just log on to pigeonhole.at and punch in the code MDM2025, MDM2025, you'll be able to pose your questions to the panel. And if it's a very, very difficult scientific question, I will direct it to Adham for sure. And in terms of moving along with the session, we are going to attempt to do an overview for you in a way, three diverse aspects. I will invite Karina to cover the basics around the regulatory and the compliance framework. So for those of you who need a bit of a refresher in terms of where we are in terms of the compliance framework when it comes to sustainability, or those of you who have dialed in wanting to find out, so yes, are these rules actually coming and so on, then you're in for a treat. Karina will be covering that for us. Then I'll invite Nusaybah to cover a bit of the start with why, if I may, the philosophical side in terms of what this opportunity brings to our industry. And of course, with Adham's introduction just now, I'm sure you would have gotten the memo that we are going to talk about the scientific side or the science-based side of ESG and sustainability. So without further ado, Karina, maybe if we could get your help to, as I mentioned, cover a bit of the basics, because we've been through quite a bit of a journey, isn't it? So there was the Paris Agreement, and then there were certain people who pulled out from it. And then, at least for my own observation, there was COP26, and I really saw, at least from a personal point of view, I saw our industry really, in a very committed way going into sustainability and ESG as well. And of course, we are now living in times where IFRS S1, S2 is a reality for commerce and industry, and of course us in accountancy. And there's also an auditing standard in the form of ISSA 5000 that is coming. So Karina, please help us, take us through where are we in terms of the regulations side of sustainability reporting. Over to you, Karina.
Sorry, thank you so much, Stephen. Can we please share the screen, please, with my presentation deck? Okay, I'm going to cover firstly the National Sustainability Reporting Framework quickly. Can we move to the next slide, please? So for those who are not familiar with this, the National Sustainability Reporting Framework was actually launched on the 26th of September 2024, and it addresses the use of the IFRS Sustainability Disclosure Standards, which is issued by the International Sustainability Standards Board, or ISSB, specifically for the IFRS S1, General Requirements for Disclosure of Sustainability-Related Financial Information, and IFRS S2, climate-related disclosure. Has the baseline for our sustainability disclosure standards for companies in Malaysia, as well as providing an assurance requirements for sustainability reporting. Now, the NSRF itself means that it ensures that Malaysia provides consistent, comparable, and reliable sustainability information. It further enhances Malaysia's competitiveness and attractiveness to foreign investors as well. So basically, it kind of level the playing field, make Malaysia the same with the rest of the world, because 206 countries are adopting ISSB standards. So the implementation of the NSRF will be done through a phased approach and developmental approach to sustainability reporting. This allows companies to gradually adopt the ISSB standards. This approach ensures the companies of different sizes and levels of readiness can implement reporting processes in stages, okay, giving them time to build on capacity and then align with the global standards. So Malaysian companies are categorized into Group 1, Group 2, and Group 3. Now, Group 1 is actually the main market listed issuers with market capitalization of 2 billion and more for 31st December 2024, 5 p.m. So your market cap is 2 billion and above. At that date, you are in Group 1. For Group 2 are the other main market issuers listed that is not included in Group 1. And then for Group 3 are the ACE market issuers. And then for the first time, non-listed large companies with annual revenue of more than 2 billion and above, 2 billion and above consecutively for the last 2 years. So this framework is also extended to non-listed companies for the first time. And then the effective date from Group 1 requirements is actually by this 31st December itself. But don't worry, if you're in Group 1, you still have a transition period of 2 years to fully comply up to 2027. Remember, this is a phased approach. So you can take your time into complying, making sure that your readiness within the period given. So for Group 2, your effective date is next year, 2026, and then you must comply fully by 2028. Now, Group 3 is given more time because it involves ACE market as well as non-listed company who probably are just starting their sustainability reporting journey, which I find is the case with most of our clients who are the large unlisted. They have no sustainability report previously done. So the government is giving them additional 3 years transition period. Their effective date is 2027, but then they have to be fully complied by the year 2030. So they have 3 years extra because they do not have the sustainability report. Now, previously, the ACE market as well as the main market had different requirements in terms of the reporting, but for the first time in this framework, the reporting requirements are the same, whether you're main market or ACE market. So the NSRS also have additional transitional reliefs, as I mentioned. These will ease the adoption of sustainability reporting. So one of the part is actually the prioritization of climate reporting. This is so that it's easy for companies who are already preparing for TCFD to transition to IFRS S2 climate reporting requirements. So the government have decided to focus more on climate reporting first in terms of the compliance. So you can start that journey first in 25 onwards for main market, Group 1. And then we also the government exclude any requirements on reporting of Scope 3 GHG emissions. You can do that later, as indicated in the diagram in the after the 2 years transition. Right now, only the requirement of BUSA is just Scope 3 GHG emissions for Category 6 business travel and Category 7 employee commute to be disclosed. So this was required to be disclosed existingly based on the regulation effective 31st December 2024. and then, sorry, excuse me, I just have to take a quick sip. And the NSRF also for the first time makes it mandatory to conduct a reasonable assurance on your GHG emissions scope 1 and 2 starting from 31st December 2027 onwards. And this is for group 1. And for those who are not familiar with ESG assurance, there are two types of ESG assurance. There are two levels. One is limited assurance, another is reasonable. Now, the government has asked for reasonable, and so you need to understand and appreciate the differences of the level of confidence to the users of the report. In limited assurance, less evidence is collected, and the procedures vary in nature, timing, and are less in extent compared to a reasonable assurance. As a result, a lower degree of confidence is provided to the user of the reports. A reasonable assurance is equivalent to an audit opinion over financial information, for example, ensuring non-financial disclosures are prepared correctly and are materially accurate. It is the gold standard for assurance, providing users of the sustainability information with the highest level of confidence. So limited assurance provides a range of confidence that is less than reasonable, but more than inconsequential or trivial reviews. So it follows the same method as reasonable. However, it is not as comprehensive in nature, timing, and extent and procedures. So it's important to differentiate that the government is actually making it mandatory for reasonable assurance on your GHG emissions, scope 1 and scope 2 only. Other indicators can still proceed with limited assurance. This is something I wish to highlight to the accountants and if there's any auditors and the students as well in the audience to understand the differences. Now I would like to cover more on the ESG assurance standards. Currently, our standards that we are using for ESG is actually the ISAE 3000. But now in the future, for the reasonable assurance, we will be using the new the International Accounting and Assurance Standard Board's approved International Standards on Sustainability Assurance, ISSA 5000, General Requirements for Sustainability Assurance Engagement. Now, this standard is effective for assurance engagements on sustainability information only. ISAE 3000 is still there, but it is for for any audits, for non-financial audits that does not involve sustainability information. So we can still apply that for any other reviews of other types of information except for sustainability. If any sustainability reports are required for assurance, you need to use ISSA 5000, and it is effective for periods beginning on or after 15 December 2026. So the new general requirement standards is actually based on the same requirements and guidance from ISAE 3000, but they have specific requirements related to sustainability information, and they provide appropriate and certain requirements and guidance from the revision of ISAE 220, which is on the revision on quality management for audit of financial statements. So they have adopted a wide range of following principles I will mention. This reporting, ISSA 5000, is framework neutral. So you can use this reporting framework whether you are in Europe, the US, or any part of the world. It doesn't matter which jurisdiction, it is applicable across. And it's also suitable for assurance reporting on all sustainability topics and aspects. This includes GHG emissions. And the limit is also suitable to be used for limited assurance and reasonable assurance engagements. And the sustainability information is prepared in accordance with suitable criteria. And it's also user agnostic. Any users can use this reporting framework as well. And practitioners can use across a wider aspect. Now, I would like to go to the next section to quickly cover on the requirements of the ISSB standards. Next slide. So right now, before the ISSB was formed in June 2023, there was a ABC soup of all sorts of sustainability reporting standards and frameworks out there. So people were actually choosing whichever to apply. There was no standardization or consistency. So with the event of introduction of ISSB standards, can we go to the next slide? We can see that there's a consolidation of all these frameworks that is key and used widely throughout the world. So ISSB is actually formed by the amalgamation of the CDP, Integrated Reporting, and SASB standards, which is the Sustainability Accounting Standards Board, normally used in the US as well. And most companies in Malaysia have already started integrated annual report. So the integrated reporting thinking is also applied, and the council is actually subsumed under ISSB together with the CDSB. And then we have the Value Reporting Foundation, who takes care of both the IRC and the SASB under now the new umbrella ISSB. And the TCFD was used as a base to develop the climate reporting S2 under ISSB. And then these ISSB standards are also interoperable with GRI and working closely with GRI to make sure that there's a harmonization of global reporting standards. Next, please. So we'd like to introduce that the International Sustainability Standard Boards actually the development in terms of the architecture and structure of the standards actually focus on matters for S1 on the presentation general requirements. And then the first team that we have done, S2, is actually climate reporting under these standards. And the industry matrix and targets guidance is provided in the disclosure specific to 77 industrial sectors under the SASB. And the structure of all these standards, either S1 or S2, will adopt the TCFD structure, which actually covers the governance, strategy, risk management, matrix, and targets. So this is the familiar matrix that normally we apply in TCFD for our climate reporting previously, has now been used as the architecture for S1 and S2. Next, please. So the full course content of ISRS S1 and S2 includes the governance, which actually covers the governance processes, controls, and procedures. That is actually provided under the oversight of the committee. Normally, it's a board of directors in a company, but it can also equally be applied to other types of entities like not-for-profit. So they may have a board of council of members, for instance, to oversee and monitor and manage the sustainability-related matters under the S1 or climate-related matters under the S2 in terms of their risks and opportunities. And the strategy pillar covers the sustainability-related S1 or climate-related S2 risks and opportunities that could affect the entity's business model and strategy over the short, medium, and long term. In terms of the risk management, the processes within the entity used to identify, assess, and manage the sustainability-related S1 or climate-related S2 risks and opportunities have to be disclosed. In terms of the matrix and targets, the entity's performance in relation to sustainability-related or climate-related risks and opportunities, including progress towards any targets the entity has set or is required to meet by law or regulation. So this is just a nutshell of what these standards are covering. Next, please. So what are the IFRS general requirements, conceptual requirements? The report has to be a fair presentation of the company's sustainability reporting, related financial disclosures in terms of their risks and opportunities across the whole reporting boundary. And then the information needs to be comparable, verifiable, timely, and understandable. And materiality requirements across the sustainability-related risks and opportunities also could reasonably impact the entity's prospects. You have to, and then in terms of the reporting boundary or entity, it has to align with the same reporting entity as the related financial statements. So what does that mean for us accountants? When we do consolidation in our financial statements, all the entities in our financial statements will also have to apply the IFRS S1 and S2 standards equally. There is no more choosing of reporting boundary selectively for our sustainability reporting based on just material demateriality. Now it is actually a requirement to report all consolidated entities under the financial statement equally in the sustainability report. And then most importantly, there is a connected information between the financial and non-financial reporting. So our accountants need to take note that we have to be involved in this reporting. Whatever that we report in our sustainability report has to have a link of information to take a leading role. And later we will find out how practitioners do that from. On to the next slide. Okay, I will stop here. For this.
Okay, thanks, Karina. Thanks. Was there a bit of a lag just now? Just me, or was it the connection? Anyone?
Yeah, I can also observe the lack of timing between what Karina is mentioning and what we are hearing. So I'm testing whether I have the connection issue or it's at your end, Karina.
Okay, Roger that. Thanks.
Yeah.
So, ladies and gentlemen, I think the memo is clear. Basically, years of effort in terms of building up the compliance requirements. Karina basically packed it into 10 minutes to summarize for you. So clearly, the background of our event today is very, very much around the regulations that is coming in or already in the market in terms of sustainability. So let's change gears a little bit. And if I could invite Nusaybah to come from her unique perspective. Allow me to describe it like that, if I may. Basically, Nusaybah, clearly you take an enormous leadership role in terms of sustainability, in terms of championing this in your organization. But I also noted that you actually have recently completed a master's in sustainability leadership from Cambridge University as well. So maybe if we could also go into a little bit of the philosophical side of sustainability and go into this aspect of start with why. Why the ISSB standard and beyond the literal meaning of the rules, what should we as accountants realize from these requirements that Karina has just spoken about? Over to you.
Yeah. Thank you, Stephen. You touched me to the core when you mentioned about what I've learned and how do I, in a way, bring such connections, internalizing this perspective and connecting it to the role as an accountant. Thank you, Karina, for the comprehensive view on the rules that being in place today. And I would like to bring that kind of perspective, establishing the appreciation why ISSB being established by IFRS Foundation. IFRS Foundation is the same organization that founded IASB, International Accounting Standard Board, that produce all these accounting standards that we accountants love so much because that's really guided us to do our work. So those accounting students, you are lucky because we have all these accounting standards to guide us. The moment we enter into an organization, we know what to do. You've been trained well. You are being currently been training well by the educators in whatever institutions that you are engaging. Hence, by the time that you join the company, you know what to do from accounting standpoint, typical accounting standpoint, a standards that has a accounting body that actually established more than 50 years already. 1973, that is where the first formation of similar body to govern accounting standards that progressed to be called IASB by 2001. So that's the reason why IFRS Foundation come up with the idea of establishing ISSB to also bring this kind of similar spirit of standardizing and harmonizing, because it's just a credible organization to do that. Okay, but if you observe what's the similar words it's been mentioning over and over again, is disclosure, the word disclosure. But in our accounting standard that we are being exposed and being trained for many years, in the same document, we can find what is the definition of it, what is the quantification of it, how to measure a certain impact, financial impact, and lastly, how to disclose. Lastly, how to disclose. But now we have a financial or sustainability reporting framework that guide us how to disclose. So how to measure, how to quantify, what's the definition of it, that is where Adham rules come into the picture. Because the data that we are dealing with is science-backed data. We need to appreciate all that. We need to appreciate how science quantify all these indicators that giving us a signal that environment is being destroyed. Environment is actually being disrupted by all these activities that caused by human through the organization. So rather than concentrating straight away, being excited that the same organization that form accounting standard now form sustainability framework, we must take a step back and realize what is it that we need to understand when it comes to the real data that we are quantifying. It's science-based data, and we must establish a clarity of measuring it. The moment we are able to measure it well, understand how we use it, only then we know whether we are disclosing something that's credible or not. So that is one perspective that I want each and every one of us here as an accountant to appreciate. Because if you take a step back, all along we've been trained to be valuing how the organization is actually creating value, creating its wealth. And as a result of that, we are the one being entrusted to capture the information, making sure that it's being reported fairly, truly, true and fair view in a financial statement. Why? Because the commodity that is so clear, traceable, which is money. It has its audit trail. It then, because of that nature, it is traceable, it is auditable. We are able to form a convictions that yes, it is well captured, accounted for, and well reported. Hence, as an auditor, I can assure this. Or even as a preparer, I can also form convictions that I have given a true and fair view report. But in sustainability, if you take a step back, what is it that we are valuing here? What is it that we are actually trying to tell? If you try to find a similar proxy of money just now, what is the proxy of money in this reporting? So if we cannot understand that, what exactly are we disclosing? If we really want to follow what Karina mentioned, by this date, by this year, we need to disclose all that. But if we do not want to appreciate what is it that we are disclosing or what is it that we are assuring, so are we really discharging our responsibility as an accountant? So probably you need to ask that. So you also hear that Adham mentioned, why he needs to come into the picture is to make sure that we address the issue, the challenge of greenwashing. And why it's becoming a pertinent concern surrounding this sustainability disclosure. Because I begin to realize as I indulge myself in this topic of sustainability, I begin to realize that the proxy that I need to establish equivalent to money when I've been trained to value that and disclose it appropriately in the book, now I need to have a similar proxy to give me the conviction is the behavior of the company. Because greenwashing comes when a company pledge or publicly announce a certain commitment, but somehow or rather doesn't seem to show, doesn't seem to be able to demonstrate that they behave as what they say. So that makes it an abstract kind of reporting. Yes, even though it's abstract, but we can still form a certain conviction out of it. What is it? The behavior. And if you take a look at a human being, what demonstrates our behavior is our decision making process. How do we decide on certain things? How do we make a choice? It's a reflection of our personality. It's a reflection of our behavior. So if you want to equate that, we will be able to have a conviction whether a sustainability report is actually credible when we can feel whether the company is behaving in a certain pattern. And the behavior lies in the way the company decide on doing its business. So if in the past the company doesn't bother about impacts or dependency of nature or the risk that it might cause to environment, and when the company start to consider all that in its decision making, and that is a starting point of us smelling this change of behavior coming, censoring the credible sustainability data could start being formed by the company. So that's the reason why appreciating it from that philosophy is important. Before we are rushing into understanding what this framework is trying to tell us to describe, if we just read the standard literally word by word, oh, describe GHG emission, describe a certain measurement. If we just literally as an accountant take that report and doing that, what actually are we doing? We are responsible of promoting to flourish this greenwashing behavior. So the thing is, we must establish a clarity. What are the steps to happen before we even can have a conviction that it's good to disclose now? So these are the things that I want accountant to start thinking, not just rushing to do it, because typically in any scenario in the past when a new accounting standard being issued, clearly accountant need to follow, because if you cannot follow, our audited accounts will be qualified. So the lineup of management of a company will make sure, okay, finance, please do what you need to do to make sure our audited accounts is not qualified. It will stay unqualified, right? So I want to encourage the accountants listening or even the educators that's listening, appreciate this lens, because otherwise we are not doing justice to the profession that we are upholding. Because if we are not shaping the right lens in appreciating the framework that being introduced, we could be the responsible party of making it stray away from its intention. So I stop at that first because it's so much into this philosophical theory lens already. I want to give space for Adham to give the content before I come in and see how it should be connected. Over to you, Stephen.
Thank you, Nusaybah. So, ladies and gentlemen, as promised, a very philosophical overview in terms of perhaps this search as well, this soul searching in terms of what does ESG and sustainability mean. And here we have an individual, a very distinct, distinguished individual in the form of Encik Adham, who actually walks the talk, because I know he spends a lot of time literally on the ground, and I will let him explain that later, in terms of bringing science to the accountability and the sourcing of ESG slash sustainability data. So indeed, I have to admit, we've been very lucky for the event today that a common friend in the form of Darren introduced me to Adham, and of course, I'm also very proud to report that Adham runs a homegrown technology company right here in Malaysia, that is deep into ESG technology. So without further ado, Adham, if you could help us with an overview as well, and if you could take us through how your technology works, what does it do, what sort of businesses that you work with, and of course, most importantly, how is science-based data tracking achieved via your technology?
Sure. Thanks, Stephen. And thank you, Nusaybah. I think your point is spot on. We see a lot of corporate wanting to do ESG, but the motivation we don't quite see. It's more of a check a box thing, make sure we're in regulation, we're in compliance, rather than the bigger picture itself. So I'd like to ask the audience today to really look at the bigger picture. We want this to be ongoing and always be around. And the world that we live in today, right, it's a beautiful world. We want our kids, our future generations to be able to nourish it as well. So ESG is not just a check in a box for compliance. It's much, much, much more than that. And I really hope that people start seeing it from that point of view as well. And yeah, back to the standards. There's a lot of standards that are going around. And for us, as an environment forestry sort of organization, we have our own set of standards, which such as the global biodiversity standards. And there's also standards for ESG, such as TCFD, IFRS that you guys have mentioned, right? And it's important that this standards and framework is actually there, because without the standards and the framework, I feel that ESG risk of just becoming another PR exercise rather than actually creating actual impact on the ground. We see a lot of actual issues happening where organization, they have a lot of claims of the progress on the ESG work, but because it's linked to nature-based sort of projects, which isn't easy to track or even audit, oftentimes they actually go way overboard with their claims. And when it's audited, the whole thing, they just fall apart. It actually happened to a lot of nature-based carbon projects recently, which actually blew up, become the huge greenwashing issues. But by enforcing stronger standards, then we hope and we actually would like more organizations to actually take this more seriously as we move forward. So to help organizations keep in line with standards, what we do is, as I mentioned before, is our technology relies on collecting drones, satellites, and AI modules, all grouped together, processed, and analyzed data. So this comes out such as data points such as carbon stock, above ground biomass, the tree species, actual species of trees within the areas, emission points, you can name it. There's a whole lot of points, data points that can be extracted from this data sets that we have, which can then fit into the framework of standards that is required by our partners or clients down the road. And we work with a lot of different industries. We work with plantations and agriculture, where it even goes more than ESG. They even use us to monitor crop health or even yield prediction of their crops. We work with forestry sector when it comes to forest inventory, biodiversity tracking, so on and so forth. Carbon developers, when it comes to MRV monitoring, reporting, and verification, we help to provide that area as well. Government agencies and corporates and ESG teams as well. So when it comes to sustainability reporting and nature-based disclosure and compliance, our data points can actually be fed into the requirements of the corporates and can be fed into the ERP software that's required by the corporate itself. So just a quick real-world example of what we've done. We recently did a monitoring of Taman Rymba Bukit Kiara in Taman Tun, as you guys may know. So we were able to deliver a complete forest health and carbon stock report. So the area is over 200 hectares. It took us just with technology, just 3 days. Traditionally, if you used ground teams, that would have taken 2 or 3 months. We've managed to cut the time so drastically that it's actually a lot easier and quicker. So from there, we captured a whole bunch of data above ground biomass, like I mentioned before, right? Below ground biomass, soil organic carbon. There's a lot, but if you want to know more, ask me the questions and I'll talk more about that. But basically, we compile all of those questions. And what's more important is we display it on a platform that is accessible by anyone that is required. So it's not just a PDF printout report that can be, I don't know, it's hard to claim or it's hard to verify. You can actually see all of the data points on a cloud-based platform, and you can actually see every single metrics that are related to it. And I think this is really important for ESG reporting because you really don't want to rely on just static PDF reports, because a lot of those could be assumption-based metrics, and companies could actually be, I don't know, they'll have issues when it comes to auditing and proving the claims when it's just a PDF-based report. When it's on a platform that's cloud-based and accessible, where data points are timestamped, there's geo-reference to every single point, and there's variable data points that can be plugged in directly to your reporting frameworks. This actually helps to ensure that organizations actually meet investors, regulators, and even stakeholder expectations for transparency. In a nutshell, that's basically what we're trying to push with Rymba. But to prove the point back again, technology is there to provide all of the data points that's required for the framework. But what's more important is the actual result of all the effort and the work that we do, right? It's not just to check a box, it's to actually create a better world for the future generations. And I hope that sinks in further to the audience today. Back to you, Stephen.
Thank you very much for the fantastic overview, members of the panel. So let's change gears a little bit, ladies and gentlemen, and just while we do that, just to remind everyone, we are on Pigeonhole for the Q&A later. The code is MDM2025. We have quite a few questions in the Pigeonhole already. Some of the questions are hitting 10 votes already, so do vote for the questions that you would like members of the panel to answer. Meanwhile, if I could invite members of the panel to also distract you a little bit and have a look at the questions in Pigeonhole as well. So let's go on to the part about standards, tools, and also the reality around challenges that we are facing in terms of sustainability reporting. So perhaps if I could come back to Karina. I mean, clearly we have a good number of sustainability-related standards. We're not lacking of that at the moment. And I believe it's not just about S1, S2, there will be more coming out as well. So each of these standards are all competing for some form of airtime from the market. So let's start with what's the difference actually between GRI and ISSB, for instance. What are the challenges that we, the accountants, face in terms of championing this sustainability reporting from your point of view?
Yeah, thank you for the question, Stephen. Actually, it's quite, right now a lot of companies are facing this challenge on how to prepare themselves transitioning from GRI to ISSB. Now, you must remember that GRI is the most common, widely used reporting standards before ISSB. And in Malaysia, about 86% of PLCs actually use GRI. So it's quite a large number. So one thing to appreciate is that despite the differences between GRI and ISSB, the both standard setters have decided to work together and then how to see themselves complementing each other. So they have actually done, for instance, the IFRS Foundation and the GRI has published an analysis, and they are mapping the resources on GHG emissions, demonstrating the potential for alignment, and then this partnership helped to reduce the disclosure burden for companies using both ISSB and GRI standards for reporting. However, there are differences and challenges that we need to appreciate as accountants. So I want to share some of these major main differences. One aspect is actually the materiality assessment. Now, ISSB's approach is to materiality differs significantly from that of the impact materiality approach of GRI. Now, GRI focuses more on how a company's activities affect the environment and society. ISSB conception tends to be more financially focused. So they have a single materiality which is based on the SASB standards and is predominantly to provide financial materiality or financially immaterial based on the firm's sector or industry affiliation. So that's the differences because the focus of ISSB is more for investors, whereas GRI is more a wider use, broader sustainability users and stakeholders. So it covers more economic, environmental, and social impacts. And another aspect is the GHG emissions disclosures. Under GRI 305, it requires a company to disclose Scope 1 and Scope 2 and Scope 3. Now, the Scope 1 and Scope 3 have to be disclosed separately, especially Scope 3 biogenic carbon dioxide emissions. So it has to be disclosed separately from the total gross emissions, and this includes the compilation of requirements to specify how a company is to disclose this information. Very specific. Now, IFRS S2 does not require separate disclosure at all of biogenic carbon dioxide emissions. Now, why do you think that GRI asked for that? Because it has an environmental impact. So they want companies to disclose how much percentage of your Scope 1 and Scope 3 is actually clean energy. It's very important for companies now to transition to a lower carbon economy. The world's going there. So GRI is asking, I need that breakdown. So for companies that has a transition plan to actually increase the percentage of the source of their energy, either through Scope 1 and Scope 3, using clean energy will actually have better impact in terms of the users of the reports because it will put the company in a better light. Whereas IFRS S2 does not require that breakdown whatsoever. So these are some nuances of appreciation that company accountants need to understand the science behind it. Why the data is there, why we are disclosing it, what's the benefit to the company in the long term. It means probably more potential investors will be attracted to your company, more cheaper cost of capital as well for your projects, right? So this is things that accountants need to appreciate. So you ask, how do we address these differences in terms of the standard and the burden? So for me, I would start firstly, do not reinvent the wheel. We are now already reporting with GRI. So let's see how to leverage off the GRI standards to comply to ISSB IFRS standards. So most important principles are best practices I'm sharing. Number one, be consistent in terms of your reporting principles. Because we noticed that GRI as well as ISSB has consistent quality of disclosures and principles of reporting. They're the same. They're just using different words, but essentially it's the same. And then look how to modify the approach to materiality assessment between GRI and ISSB. So you may have to do double materiality assessment to satisfy both standards. And then modify approach to determining what information about material topics is material and should be disclosed. So this is the example I shared just now on the GHG emissions. And then using both the GRI and ISSB helps to ensure disclosures are complete and in full compliance, and the readers have better transparency and credibility, especially to the users and the potential investors that we intend to attract. Because PLCs need funding in the future, and then making sure that our rating agencies or analysts give us good rating so that we can be making sure that we position our company where we want to be. Okay, that's my advice. Thank you.
Thanks, Kevin. Thank you. Thank you. So perhaps also along the lines of that, I would like to also check with Nusaybah. So in terms of this S1 and S2, uh, it starts using the term risk in the standard. I have to admit, just on top of my mind, I can think of risk being mentioned in the auditing standards. I'm not sure how much of risk has been mentioned before in the core IFRS before, but with clearly with especially S2, climate risk is being brought to the forefront. And I wonder if this has any link with the concept of risk management. And if I may speculate, does it mean that there is also a future-driven perspective that we need to look at in terms of a company's value or value creation? So if I could direct that to you, please, point Nusaybah, as in, is there a link between risk management and sustainability reporting?
Thank you, Stephen, for that question. But before I answer you, I would like to build my response as a continuation what Karina mentioned. Because Karina has unpacked the difference between GRI and ISSB succinctly, in a sense that she gave example, very targeted example, that gave me a realization, to be honest with you, when I studied those documents back then when we started to consider adopting TCFD. TCFD now has been culminated to be IFRS S2. When I study these two documents, just exactly like what Karina has highlighted, there are differences. But learning on subject sustainability makes me becoming an accountant that is so philosophical now, Stephen. Because how I interpret the difference, on top of agreeing to the level of detail that Karina mentioned, I take a step back. I looked at GRI. GRI is driven by the fact that disclosing all the numbers, disclosing all the metrics, precision of it. Okay, that is what GRI is giving. And when we looked at TCFD before IFRS has even been established, TCFD has come up with a different design architecture. It has governance, strategy, risk management, and metrics and targets. And I sort of pause and ponder while I looked at the image, the logo that TCFD has been promoting all along in a circle. The big circle is governance, followed by strategy as well as risk management, and metrics and target is the smallest circle in that visual. What does it mean? The framework is trying to tell that it's bigger than just metrics and targets. Whereas GRI is putting all the requirements in terms of metrics, in terms of targets. And that is where these two framework is actually harmonizing. And when I appreciate that visual, only then I realize, and connecting to my earlier statement about behavior, the framework that we have today, which is TCFD and now become IFRS S2, the standards wants us to now take a step back and appreciate that if we want to shape a behavior of a company towards a sustainable and responsible business, first we need to have an understanding whether or not the company established a governance body that looked at this particular area or not. So that is why the company needs to be clear and commit to have appropriate governance body that look at climate. Only then we can start to feel that the company is transitioning. The company is reshaping its behavior. Okay. And if I can share, I looked at IFRS S2 not in its pillar, because this is why I'm going to be touching on risk management, Stephen. This is why I'm going to be relating to what your questions is asking just now, specifically on risk management. If we, as an accountant, literally take the standards and read word by the pillar, you have a tendency of sophisticatedly ticking the box. Okay, but for me, how I internalize the standards, and when I read the word that's being mentioned, where organization need to now realize what are the sustainability related risks and opportunities. And now specifically on IFRS 2, it mentioned about how the company is aware what are the material climate related risks and opportunities that the company is facing. So risk feature as the starting point of all this, which means that it is requirement for the company to take a look at what's needed in the risk management process of the company that require refinement. If that doesn't change, then don't talk about commitment to deliver a sustainable action. So, as an accountant in the past, we don't really bother about how our risk practitioners in the company doing whatever they want to do, because the moment they give whatever their view to our business, these leaders that make decision on investment, they do that. The moment the investment is up and running, I come in and to evaluate whether the investment really translates into whatever anticipated income or anticipated profits that it generates, or whether or not the investment is actually putting us at danger. So that is where we come in a more normal, typical accounting world. And we don't really look at risk until and unless we want to incorporate that in our impairment exercise. Because only then we look at future, whether the cash flow generated by this cash generating unit is still as what we perceive in the past, or how's the market outlook on it, what are the risks to be factored in our future cash flow, for example, country risk premium. So all that. All because we want to make sure that we have true and fair look forward cash flows where we present value to make sure that we have a good NPV to compare against NBV. So that is the normal typical role that we play whenever we look at risks that relate to our work as an accountant. But now in sustainability, what I want you all to realize that we must set aside what metrics to measure, what metrics to disclose. First, establish a clarity whether or not in the organization the enterprise risk management is being refined to appreciate the climate related risks that the company is actually causing. In this case, if the company is actually in a business of emitting GHG emission, quantifying GHG emissions and using drones that Adham is offering, okay, we capitalize on digital to make sure that we can capture appropriate GHG emissions that we are incurring over a certain period of time, and using that information in our risk management and risk assessment. If we are not changing that part, which means that if any new investments or any new business decision is not using this lens or not using this data to caution us as do we really want to do these investments, because this investment causing this GHG emission to the environment. If we proceed, there is a higher risk of us being exposed to the regulations around it, the compliance of making sure the emissions is being kept. So these are the things that need to be seen before we rush into specifying what kind of emission that we need to split, content of it. That is where I want accountants to shift their mindset and being part of the team that reshaping the organization, how the organization decide in doing their business. So to me, if a company come up with a good data point in terms of GHG emissions composition, disclosed as what GRI wants, as well as what described in IFRS S2, but there is no evidence that it can narrate in its reports that the enterprise risk management has been embedded with that information when it decide on its existing operation, or and when the company wants to decide on new investments. I don't really feel that the company is credible even in disclosing that GHG emission amount. So that is how we need to now position our lens as an accountant, connecting risk management into ascertaining the comfort that we are part and parcel of the team that capture the data worth disclosing or not. And and that is only the starting point, okay? Risk management. Even if it's considered in the risk management, but how courageous the company is actually putting it in its strategy. Even if it's considering it in risk management process, but the company is not courageous enough to even put in changes in its business strategy, it doesn't lead us to anywhere. Because the actions comes from the strategy that the company pledged. So that's the reason why TCFD having a strategy pillar in it, and IFRS S2 put a strategy pillar in it. If you assess in a risk management process, you describe in beautiful words in the integrated report saying that you have enhanced your risk management process to incorporate all these risks into it, using a digital tool to quantify the non-financial data, making it visible, but nothing in the strategy that show the company is using all this data point to change the strategy, it is still meaningless. So that's the reason why the IFRS S2 framework introduce risk management, introduce strategy that has to be connected to one another. Only then the metrics and targets become useful. Because when you have a strategy, that means you have a direction to go. The direction to go is being measured through your targets. Only then the metrics and the targets become a very useful disclosure. Otherwise, it's just merely information, but it doesn't tell how the company is behaving. And all these things are become an accountability of the governance body. That is the reason why the governance is the largest circle in TCFD logo. Because without a clarity that the governing body is upholding in terms of its risk management, its risk appetite has changed, and courageously demonstrating it in the change of the strategy, and even come out very prominently and credibly in terms of showing the world how they progress based on targets that's actually showing a positive progress over time, it's nothing. So this is how I see interrelated between the two frameworks and how we can actually appreciate the philosophy of it, internalize it, and not to rush just because we are an accountant. We like to quantify, we like to measure. So I now become a different accountant, though my line of training 22 years in very rigid way of delivering things, but when I appreciate this lens of sustainability, it gives me a different perspective. And what stay the same is when we are accountant, we abide by a certain rules, a certain principle. So when we say that I need to see a conviction on this, if I cannot reach the conviction of this, you cannot show me how you use the data on GHG emission in decision making. You cannot show me how you use the impact of nature, impact of biodiversity species that we endanger in our decision making. I don't have a conviction. When I don't have the convictions, I cannot agree to this disclosure. So I stop at that.
Thank you very, very much. And Adham, rather than direct a question to you, why not I invite you to respond to some of the food for thought that Puan Nusaybah have just shared, especially from your perspective from a deep tech angle. Over to you.
Thanks, Stephen. I mean, it resonates a lot with me because even when I first founded the company, the actual reason started this company was to. So I came from a tech startup, very corporate based before, and it was all corporate. And when we exited that company, I felt that there was something missing when I was running the previous startup. It was all just about the bottom line, investor interest, and all of that, and there wasn't a fulfillment in when it comes to what we were doing, because it was purely based on bottom lines. And that led me to, when founding Rymba, to focus more on what truly matters. And of course, at the same time, we need to survive and sustain. We need to create a business that still creates a good bottom line. But it doesn't mean that we do all of that while putting what we have in front of us, the beautiful nature, the beautiful forest and environment around us, at risk. By finding ways to balance that out and having more corporates and organizations understand that ESG is not just a checkbox, it's a huge effort, collective effort of everyone around us to ensure that we preserve and we conserve what we have today, so the future generations can get to explore it and enjoy it and go out and have fun just as we did. And we don't want to see a future where our kids are no longer able to touch green grass or smell fresh air and all of that. So we have to look at ESG totally differently. It's not a compliance regulatory thing. I mean, it is, but what's more important is the goal of it, right? It's not just to check a box, say, hey, I'm compliant, but it's the actual goal of preserving of what we have and making the world a better place. I think I'm like a broken record. I'll leave it at that. Pass it back over to you, Stephen.
Thank you. So we are changing gears again, going slightly deeper into tools and technology now. So I'm conscious of time, so we'll do our best to go into Q&A soon. So if we could go a little bit faster, members of the panel, in terms of the tools and technology side of things, if I could invite each of you from your unique perspective, what's your take on tools and technology on sustainability reporting? Share with us in terms of where are we now, where are we heading, or better still, the likes of Adham could very specifically say what kind of tech we actually have right now and what is achievable. Karina, maybe if we could begin with you.
Share my slide on the AI tool we have in Deloitte. It's called Sustain Next. I just go to slide 17 straight away. Okay, I want to share with the audience that Deloitte actually has developed on their own, as auditors, a Gen AI tool. Actually, this tool will help us to speed up our work. The entire engagement previously, when we did the gap assessment and readiness reporting for ISSB, required at least 5 months. Now, using this tool, we can actually down it to 8 weeks or 2 months, where we actually fit into the Gen AI tool the information required, and then it does an assessment to the reporting framework and standards. And then we can actually generate a report. What are the gaps? And then what are the areas that companies can focus fully during the transition period? And what are the priorities the companies can do? And then what are the investments they may require in terms of their people, process as well? And then if they need any tweaking to their IT system. So this is quite beneficial and helpful in our work in serving the clients. So not only do we become more effective and efficient, it also reduces the budget because less man hours required. So it's more affordable in terms of the advisory for the clients. So it has a big game changer impact for our clients and how we service them. So using such tools, and I believe there are out there also GHG emissions calculators. So you do not need to spend time and effort too much. You just put in your numbers and then they have the specialized Malaysian global weightage for the different factors to be used for the GHG emissions calculations, so your work is also faster. So I would advise accountants to actually familiarize themselves what's out there available in the market and resources. The government agencies are also providing under the NSRF PACE some of these initiatives, also training for you to attend to understand more AI. And MIA has also provided like this digital week or month, as well as courses for you to understand as accountants how to use available tools out there to support your work. Thank you.
Thank you very much. There you have it, ladies and gentlemen, AI tool for you as well. If I could invite Nusaybah, your thoughts on tools and technologies.
Okay. As before, continuation what Karina has been sharing in terms of available tools, software, and application that will facilitate us. I will still go back to the thinking cap that we need to uphold. We need to be very clear. When we choose a system and tool, it's actually to do what? To surface the data to give to the decision maker, or to just have the tool so that we can help the company to tick the box and say that it's complied and it is being disclosed. So I'm asking your conscience here as an accountant, because it is important for us to uphold this perspective and stay true to our profession, making sure that we choose the right purpose. I've been practicing this and I'm enjoying myself in delivering that lens, in the sense that I have a clarity when I, in a way, support a certain procurement of tool. I'm very clear why we need to have the tool. For example, we embark into the journey of quantifying physical risk. For under climate risk, there's physical risk and transition risk. And GHG emissions is part of transition risk for that matter. But physical risk is even complex in terms of quantifying. And why I decided to support procurement of a physical risk tool, because I want the data to be captured so that I can bring it for discussion, bring it for deliberation, and sense the change in risk appetite by the decision maker. And now when we have a tool that can quantify physical risk, how does it impact the value chain? How does it impact the business interruption in terms of bottom line? When the catastrophe happen, should we change the way we decide on how we operate? Should we now use the data point to now rethink on how we invest? So that is the usefulness of the data, not to rush about disclosing, oh, we have this quantification of physical risk here and there and where and how much. It is not about that. So that is how I'm enjoying my role, understanding the philosophy of the sustainability framework, bringing the lens of accountant in quantifying it, appreciating it. It comes from science data, appreciating that I cannot lend into a financial amount if I don't appreciate the science behind it. How does the science cause my financial to move, and use it to bring it to the decision maker, tell them that this data is good because we're churning out using this tool. This tool is credible. This tool is actually being proven to facilitate a certain assessment and validation of non-financial data. Using that non-financial data, we're marrying it into the projection of financial statements, and hence we can come up with a certain degree of disruptions into our bottom line, for example, when a certain physical risk happen. So by understanding the purpose, only then we can have a fulfillment in deciding why we choose a certain tool. And to the solution provider out there that's listening, I also want to take this opportunity to give you a questions to ponder. When you promote, when you are carrying out your role in suggesting all these available tool and application, ask yourself, you are promoting for what? Promoting them to be able to guide their decision maker to decide differently, or promoting so that the company can just simply and merely disclosing the information. So I'm giving both perspectives so that you all can pause and ponder, because in order for us to succeed in this, it's just like what Adham mentioned. This is a quest of elevating each and every one of us in terms of our profession, a quest of defining why we exist in this world. Why we exist in this world and choose this profession to contribute our intelligence. If we just want to do it for the sake of doing it and capitalizing on opportunity as it's a new and attractive business avenue to promote our tool, to promote a new service and consultancy, ask yourself again, because this is not a quest for that. That's all from me, Stephen.
Thank you, Puan. Thank you so much. And as usual, Adham, if you'd like to cover, this is your turf, tech.
Sure, let me chime in a little bit. But just carrying on to what Nusaybah just mentioned, a lot of ESG was surrounding around just delivering metrics or certain metrics that you have to, data points you have to deliver to comply, right? So it started a lot around emission points, energy, and so on and so forth. So we want organizations to look at a different side of it as well, which is more towards the nature side, meaning how we actually intertwine between climate and biodiversity and all the emissions and energy that's going on. So what we've been doing at Rymba is using drones, using satellites, and all this high-tech stuff. We use our AI module to deliver and really process and analyze all the complex calculations and data points that we have to provide actual projections to the organizations and our partners to the causes and effects of their action. Meaning that, for example, I'll just give a quick, easy example. There's a forest patch that's probably 10 hectares. And if a construction company wants to build a road in the middle of the forest, using the amount of data that we have, all historical data, back tracing all the way back to 1980, we can actually compile all of the effects and causes of creating that road in the middle of the forest. We can actually see, and we can actually provide projections on biodiversity effects, on actual emissions that would be created from the project itself. From the reduction in biodiversity would, of course, reduce in carbon stock, carbon sequestration, and so on and so forth. So that's where we want to take technology moving forward. It's not just a tool to give you data points, rather it's a tool to provide you with a result of your action, or hopefully that's what we want anyway, to our consumers to actually see it. A tool for them to actually take, and this is where I believe tech will move with ESG moving forward, as a tool to provide actual insights and consequences to your actions based on your business operations, whether it's positive or whether it's negative. Hopefully, we hope the organizations move it towards the bright side. But that's why I believe technology is moving forward. It's not just a reporting metric data point sort of tool. It's a tool to provide you with insights and proper results and consequences of your actions based on what your business operations are.
Thank you, Adham. Thank you so much. So, ladies and gentlemen, there you have it. Allow me to port over to the Q&A now, because thank you very much. You've been a great audience. We we're getting a lot of votes in terms of the questions coming into the pigeonhole. And Adham, just to give you the heads up, there's even a question specifically directed to you. It's a bit further down the list, so I will exercise my influence as moderator to direct that question to you. This is the one with the 6 votes. But Secretariat, if you could help pull up the question with the highest vote from Pigeonhole, and I read it as 40 votes at the moment. The question goes like this, and I intend to direct it to Puan Nusaybah just to give you the heads up. So it goes like this. How can companies build internal capacity to manage sustainability reporting effectively, especially where expertise is lacking? So Puan will need you to distribute your some brochures for Cambridge and get a few more classmates to over to you, Puan.
Yeah, thank you so much. It's very spot on questions. And typically, why we have a certain hesitation, certain slow reactions to progress is because lack of knowledge. If we have a knowledge, we would do it, isn't it? So that is the reason why I indulge myself into this formal learning, because as a leader, how can we lead when we do not know the content or the subject matter in the area that we are leading? And as a leader, continuous learning is given. So that is where I see the need of organization to start doing, find ways to motivate the employees to explore and expand, to be reskilled, to be upskilled. It's simple because when you don't know, obviously you cannot start. And in fact, in these organizations that I'm working, back then when I decided the opportunity to be exposed in this space came rather in a way by chance. I was asked to look at sustainability and what can we do as finance to contribute in this space. And it happens back then during the time where we are still in the lockdown mode, 2020, 2021. So I took opportunity since we cannot do anything. I explore an avenue for me to have a good footing on this. So I took online course first to begin with. That's how MCO has been memorable to me, because I completed 8 weeks online course with Cambridge Institute of Sustainability Leadership as a start, to just make sure that when I'm being given a responsibility to lead whatever small task it is, I have a good grasp on the knowledge of it. Otherwise, how do I want to speak about it if I don't even have a knowledge on it? And that kind of initiative is has been so fruitful in the sense that it sparked a new passion, and that's the reason why I progressed to apply to do masters in University of Cambridge, and Alhamdulillah I've been accepted and completed the studies in September last year, and hopefully I can be there in this coming July for the formal graduation ceremony. So, but that has been a fulfilling experience in the sense that being able to equip myself with the relevant knowledge and then build that self-confidence around it and bring a team to also appreciate it. And I am very in a way, I advocate learning in doing our work. So, and as since I've completed my masters, I now appreciate research. So in areas that no references of how to quantify physical risk, how to measure scope 3. Of course, in IFRS S2 mentioned about scope 3, but how to quantify it, how to measure it, we as an accountant, I myself and my team, we have to read GHG protocol. We have to appreciate the science related words and terminology introduced in GHG protocol, understand how measurement of it, the methodology that's available, advised by GHG protocol in terms of measuring scope 3. Only then we suggest to the management which approach to be undertaken. The moment we decided on that, only we progress and assess whether or not it's a good time for us to disclose. So this is where building a team with the right process of mastering the knowledge and know where to go in terms of finding the reference to learn. And if there is no framework around it, the last that we can go and hold on to are the research work. So researchers that's listening, I really appreciate your contribution in this space. In the past, I don't even bother reading research. For 20 over years, when I delivering my work as an accountant, I must be honest, I don't really read research work because everything has been nicely packaged in accounting standard. I don't need to go back and look at how critical researchers are arguing or even questioning a certain standards being introduced by accounting standard body, because I know the moment it's being announced, we have to adopt it. But when I expose myself into sustainability related space, I appreciate how researchers actually throw in their lens, go all the way to gather some evidence to back their theory with some data. And that is where my team and I leverage on in the absence of any other reference that we can hold on to. So that is how I think leaders in organization probably want to consider if you want to start having a good uh, grip on this and in a way progressing towards something that's more promising rather than rushing to just making it being seen but not really having a good foundation on this, because sustainability reporting, we are here not just as a sprinter, we need to be probably an ultra marathon runner, because this is for a long haul. I stop at that.
Thank you, Pan. Thank you, thank you. So clearly, it's about investment. Clearly, we need as leaders, we need to get into it. We need to lead the organization to get into it. And yet, let's go into the next question, the one with the 36 votes. And if I could invite Karina to help with this one. This is a dollar and cents question. And it goes like this. What are the main issues or challenges in implementing ESG reporting, which we have actually addressed quite a bit just now, but the second part is very interesting. Can ESG disclosure improve financial performance? Karina,
Okay, thank you, Stephen, for this question. Actually, the challenges, most of the problem that companies face is regarding with data, because ESG reporting is data driven. So most companies will face, do I have the data that I need to report? But most importantly, like Nusaybah said, we have to see our business, and then what are the data that's material to the business that I really need to disclose, and it's useful and meaningful to the reader of my report. Okay, so for our decision making. So this is very important, because then you decide what kind of data I need to collect. So then you need to know whether that data is available, and if not, can I start collecting them? How do I collect them? Is there the quality of the data, and then the accuracy of the data, the completeness of this data? So that is not just from the accountant, not financial information. I'm also looking for non-financial information. So it could come from operations, it could come from HR, it could come from legal, it could come from different parts of the company, from different data gatekeepers. And then at the same time, do the gatekeepers update this information regularly? Do they have a system, or is it manual? And then, how do I go about doing this as an accountant to make sure the data quality and then verify the data through assurance? So that's why we have that audit. It could be internal audit review or even an external audit to make sure that the data sanctity, the data accuracy, and as well as completeness, and then the data's assumption, what kind of methodology did you apply to actually get that, the measurement unit as well, and the methodology. So there's so much aspects and complication in just this data collection itself. And then not to mention, ESG has evolving regulatory standards and framework. Okay, we are now doing S1 and S2, but guess what? There's S3 and S4. So S3 is biodiversity and S4 is regarding human capital. So ISSB standard setters have already highlighted they will issue those in the coming years in 2026 and 2027. So there are more challenges for us accountants, more data again to collect, and more information required. It's not just a compliance game. Suddenly it actually becomes, everyone becomes involved. But most importantly, the accountant has to drive this process, because we need to make sure there's a balance between transparency and confidentiality. How much do I need to disclose with, especially when regards to strategy? Because it will impact your organization if you disclose too little, because then, potential investors will say there's no value creation. I don't see much in this company. And then you need to also balance that with how much, do I satisfy these investors' thirst for knowledge in terms of my company performance. And now we talk about whether these ESG data that I actually disclose really has any impact on my financial performance. Now, there's a lot of studies out there that's going on this subject. And there are some evidence that support that companies with robust sustainability reporting tend to experience enhanced financial performance. Now, this is attributed to factors such as from the stakeholders. They build the stakeholder trust in terms of the quite broad stakeholder trust out there. So we're talking about not only investors, we're also talking about suppliers, potential business alliances. We're talking about employees who get attracted to work for the company and contribute to the company. And then we talk about the brand reputation and the market position of the company, the operational efficiency. All this comes from the stakeholders' trust that you build with the information, that you are more transparent and sharing more information. Now, the information does not have to be quantitative. It can be qualitative. Okay, sustainability has two types of information, and it's important how you do qualitative. Because if you do the qualitative wrongly, you use the wrong keywords and it goes to greenwashing, then it becomes a problem for you. It's like double-edged sword. So you have to make sure what you disclose is exactly what your practices are, not something beyond or something that you think you are supposed to do, but I haven't done. So it's very much important to avoid any greenwashing. Thank you.
Thank you, Karina. So let's as promised go over to Adham. Adham, I want to cover the question in Pigeonhole that's specifically directed to you. But if I could get you to build upon what Karina has just mentioned just now, she did a bit of overview for you actually in terms of the data tracking side of things. So there's this question with 8 votes that's directed to Adham specifically. That goes, what types of sustainability data does your platform track, and how does it align with science-based targets? How does that help with sustainability reporting that especially Karina has just overviewed just now? Over to you, Adham.
Sure. Yeah, thank you for the question. So at Rymba, our platform actually focuses on generating high-resolution environmental data, but it's focused primarily towards forests, plantations, or even land-based ecosystem. So as a quick summary, Number one of the areas that we focus is carbon stock and sequestration. So we measure above ground biomass, below ground biomass, soil organic carbon, basically anything around carbon sequestration using drones, multispectral and hyperspectral data. So with all of these data points, we can actually enable companies to estimate the carbon sequestration potential, which is actually very critical when it comes to SBTIs for land-intensive sectors, such as forestry, palm oil, or agriculture, and so on and so forth. The second area or data points that we capture is surrounding biodiversity and species level monitoring. So with the tools that I've mentioned, our AI models then supports tree species identification, biodiversity indicators, forest regeneration, forest health, the canopy cover, the forest height, and all of that, which is basically super vital for companies aiming to address Scope 3 nature impacts, or TCFDs aligned based on biodiversity disclosures. The third area that we also capture with our platform is towards land use and ecosystem health. With satellite data, we can actually track land degradation, deforestation of an area, regeneration of forests, and even ecosystem changes over time. So we have access to data backing all the way back to 1980, all the way to today. We can actually see all the progress of the land, whether it's degrading or it's regenerating, as it goes based on the timeline. So this as well aligns very well with SBTI flag forest land and agriculture guidance, which requires nature-related disclosure and emissions tracking from the land use changes. And what we're working on at the moment as well is also water and soil quality, which is highly relevant for mangrove, peat, or even agroforestry projects. We're incorporating a lot of data points around water and soil quality, such as water turbidity, even the chlorophyll areas, sediment stress, based on hyperspectral satellite data. I know this all sounds a bit confusing, but yeah, the science backing all of the methods to control and extract all of the data. And all of it is actually supporting a lot of the SBTI flag compliance when it comes to Scope 1 and Scope 3 emission estimations, or even if you want to monitor your reforestation or conservation efforts, it can actually be tracked with the data points that we can provide on our platform. I hope that answers the question. Yeah, back to you, Stephen.
Super. Thank you. And still on questions, I'm struggling a bit to pick and choose some of these questions because some of it I believe we have covered directly or indirectly in the discussion up to now. So maybe if I could get Secretariat to pull up the question with the 19 votes that starts with how do AI? Question with 19 votes that starts with how do AI? Can I invite members of the panel to go straight to the second portion of the question where a member of the audience is specifically asking about performance benchmarking and scenario analysis. I know we've spoken about a lot of data tracking up to now, but can I invite members of the panel, if any one of you would like to volunteer, just to flesh out a bit more in terms of this part about performance benchmarking and scenario. Like for instance, is there a rating agency of sorts out there or someone collecting industry-wide data where companies or people doing sustainability reporting could benchmark against as well, open to all members of the...
Yeah. I can help with that, Stephen, because
Okay.
if you looked at IFRS S2, and in fact in the past TCFD also require a company to disclose scenario analysis, which means that the company needs to tell public that how resilient are you vis-a-vis the climate related scenarios that's happening and potential to happen. And in fact, companies are suggested to consider public climate scenario assumption. So you can see from an energy industry, typically the players are using IEA as a reference when we want to reflect the level of resiliency of the company vis-a-vis the various climate scenarios. So what does it mean? Because this is where the pool of scientists, they give a prediction what's going to happen in 2050, what's going to happen in 2040, how it's look like when it comes to certain product prices, crude prices or gas prices. So a company that's involved in energy industry will need to tell the world that when such scenario happen, when everybody progress towards becoming net zero, obviously the attractiveness of fossil fuel is no longer there. So what does it mean? The prices will become low. When the prices become low, how does that affect your company? How does that cause an erosion in whatever financial indicators that you choose? So that's why when you look at all these players, they will give some visualization of it. In a way, will be able to tell whoever digesting the information from such disclosure would be appreciating, oh, if this is how the world look like in 2040, when the IEA assume price of crude or price of natural gas hovering around this range, that is in a way hypothetically how the company stands vis-a-vis that kind of scenario. So this is where investors, readers of financial statement or readers of integrated reports or annual report will be able to digest and make some um, interpretation and benchmarking among peers within the industry. And I must say that the logical benchmarking that we can form as far as sustainability is concerned, to my understanding, the lowest is at industry level. Because if we try to just simply benchmark across and irrespective of industry, it might not be a fair representation. Reason being, sustainability look at risk and opportunity. So different industry has a different risk that it's exposed to. So if we want a benchmark, it is logical to benchmark within a certain industry. That's the reason why IFRS S1 and S2 being issued by ISSB, accompanied by a sectorial reference and framework that being issued by SASB, because of certain selection of risks and opportunities, it's actually worth to look at industry by industry. So establishing the boundary of risk and opportunity within an industry, but read it in a form where IFRS wants it, in IFRS S2, for example, and use all these data points of future predictions and bring it into a financial term. So now in this space of sustainability reporting, accountants needs to appreciate the quantification of future outlook. We are so good in quantifying historical data and publishing historical data and getting it audited and making sure it's remain unqualified. Now we need to embrace appreciating future financial impact and have a certain understanding that the computation of future financial statement is really backed by a reasonable assumption. I think I stop at that.
Thank you, Pan. Thank you. Thank you. Now, I'm conscious of time, so members of the audience, just bear with me. Stay with us for a few more minutes before we wrap up. I just got this one very interesting question, if I may, that I spotted. So, Secretariat, this is the question with the 9 votes coming from public sector. So, if I could invite members of the panel, I'm not sure how familiar we are with this one, but it's definitely a very different questions to try and address. So from your point of view, what are the key gaps or challenges in the public sector's sustainability reporting compared to the private sector? How can government agencies build internal capacity to meet ESG expectations? If I could invite members of the panel, please.
If you don't mind, in interest of time, I can start. Maybe later Karina and Adham can chip in. I'd like to build upon what Adham has shared on the biodiversity and perspective that we need to understand in terms of the data points that can be made available with the various tools. And by making use of that, probably the public sector, wherever you are, we need to have a clarity on what are you governing. Typically, public sector is being established to govern something. If you are being established to govern a certain ecosystem, a certain preservation of nature-related area, for example. So which means that you need to concentrate on that angle and understand what sort of data that needs to be appreciated from science perspective. If you are being entrusted to look at forests in Malaysia, for example, then there are certain parameters surrounding nature and biodiversity species that we need to observe, and what sort of impact and dependency that's happening around these designated roles and responsibility that you are looking at, and having a clarity on who are the responsible party that will be impacting the area that you are governing. If you are looking at forests, then what are the exposure of risk surrounding your forest deforestation issue? So build that kind of connections will help you to iron out what sort of ESG focus that's needed, so that you are able to know who are the actors within this area. Actors mean it could be the community around you. It could be the companies that operate around the area that you are looking at. Hence, you can build connections to it. Being able to know that these are the actors that contributed to the impact of the forest that you are looking at. So that could be one example. And if you are coming from a public sector that looking at women, or in fact children for that matter, so that is touching the social aspect of ESG. So what are the relevant parameters that you need to focus on? Probably gender equality, or if it's children in nature, is it the looking at the parameters of improving the level of poverty that will make sure children are able to be uh, giving opportunity to have a good education. That is one area that you can build connection. So rather than trying to figure out the whole spectrum of ESG, try to build a connections of the purpose of your organization to begin with, even though you are a public sector. But then define that purpose and try to build the connection on which part of ESG that matters. And then identify who are the actors that contribute to the area that you are governing. And from there on, build the collaboration with the actors. Because of in sustainability space, we cannot champion this by ourselves. It requires collaboration from various parties in order for us to succeed in this. Yeah.
Thank you, Karina. How many quick points do you want to add to that?
Okay, I support what sorry, I support what Nusaybah mentioned. They should focus in their area, but at the same time take into account the data that you are collecting, and the parameters tend to be on aggregate basis and no longer on detailed company or individual information. So the way you are actually collecting the data will also be different, the methodology. So you need to look into this, as well as the assumptions, how you're going to go about updating that data and keep it fresh. So like Puan was saying this now, collaboration is the way to go about doing it. So you may need to work with the entire ecosystem. Now, the ecosystem doesn't mean just profit-making organizations. There's also non-profit as well as social civil organizations who may actually be working with certain communities as well. And then some of these could be minority communities, indigenous people who are impacted through their location or activities that you are actually supervising. And then you must not forget to have that 360 view, because a lot of these is oversight. We can see the deterioration like landslides and causing damage to life and property. So these are things where local authorities who have areas of responsibility will need to look at. It's not just environmental, they must also look at the social aspect, the people who live in the area, how they're impacted by those activities. Okay.
Thank you, Karina. Adham,
Yeah.
thank you.
Yeah, I guess quickly from my side and the challenges that we've been facing anyway when dealing with public sectors. A lot of the data points actually they lie in silos between every single jabatan, not just jabatan, even between different states. Now, I understand there's a need for it to be separated that way due to privacy issues, so on and so forth. But it creates a lot of challenge for us to be able to compile and aggregate the data to come out with something more meaningful. So if you look at corporates who are working together, most of the data are collective. We can all benefit and work together for them. But in the public sector, it doesn't work that way. When it comes to forestry, agriculture, Jakwa, the Orang Asli one, all of the data points are all in silos. And for us to make meaningful actions or meaningful analysis of the data is troublesome. It's a huge issue. Even between different states, we have to begin the process all over again. So that's one of the biggest challenges that we're facing technically as well. And we hope we can find a way to solve it. But I really hope that the public sector can find a central depository or something that we can put the data together, because at the end of the day, what we want to do is just want to bring good to everyone, right? So that's one of the challenges that I hope we can solve within the public sector.
Yeah,
Thank you.
Adham, you trigger me to say this. You know what? Sustainability actually bring all of us to the purity of behavior that we've been introduced when we were small. We always to us to be sharing things with friends, sharing things with siblings. And after a while, when we enter adulthood, we become very stingy. We just want to
Where's the
protect
Hawaii?
our area. We want to protect because we want to stay in power. We want to protect a certain area. But now sustainability wants us to pause, reflect. We cannot do that anymore. We need to share. That's what I want to say.
Amazing.
Good one. Now, that's all we have in terms of time today. So maybe if I could just invite a short 20-second shout out from members of the panel to the audience. Nusaybah, perhaps back to you, starting with you again.
Thank you, Stephen. It has been a very fruitful sessions of sharing views, cross referencing of knowledge between me and the speakers, and as well as Stephen's. And I hope the rest of the audience listening can benefit from this, because coming from bottom of my heart, I am looking forward to have a lineup of accountants from Malaysia that driving this differently, driving this cohesively and collectively, because we can do this together and we probably can be the nation that never U-turn on this.
Thank you. Karina?
Yes, for me, I just have a short one to remind accountants that sustainability reporting is all about data-driven, and then that data can be quantitative or qualitative, and then it has to be connected, right, across a wider, not just your organization, remember the wider ecosystem, and it's consistent throughout, and then making sure that it's scalable, your information, and sharing as well. So remember, it's not just Malaysia, it will go throughout the global, because it's an effort for all of us, like the Paris Accord, to actually save the planet and the people. So remember that this is the wider cause and purpose why we are doing this.
Thank you, Karina.
Yeah, thank you to all the panel members as well. I think I learned so much from you guys today, especially from the accountant's point of view. It's really hard for me to get that perspective, so I really appreciate that. But if I can leave you guys with something today, is just remember that ESG is not just about planting trees or publishing really good looking reports. It's about turning sustainability into something that's measurable, that's traceable, and that's truly impactful. And that's what really matters at the end of the day. Thanks.
Thank you, thank you. Members of the audience, members of MIA, students, lecturers, I think we've had the very great pleasure of having speakers who are very, very, very passionate in the topic of ESG. And I have to say, I would also like to extend special thanks to MIA, DTIC, the committee for crafting this topic for our discussion today. Nadira, back to you.
Thank you, Mr. Stephen, and our panelists, Mr. Adham, Ms. Karina, and Ms. Nusaybah, for the wonderful discussions. And thank you, everyone, for sending in the questions.